Let's be honest, monthly income investing has completely changed in the past few years. Dividend stocks and covered call ETFs have exploded in popularity, especially with retail investors who are chasing passive income, portfolio diversification, and long-term growth. But now there's a new contender on the scene, BTCI, the NEOS Bitcoin High Income ETF. And it's not just another Bitcoin ETF. BTCI is something different. It fuses the explosive upside potential of Bitcoin with a highly engineered covered call strategy, one that's already generating a whopping 28–30% annualized yield in monthly distributions. And when you pair BTCI with NEOS's two other flagship ETFs, SPYI for S&P 500 Income and QQQI for NASDAQ 100 Income, you're looking at what could arguably be the most powerful three-fund income ETF portfolio in the market today. This isn't just hype. In this breakdown, I'll walk you through why BTCI is such a game-changer for Bitcoin and income investors, how QQQI and SPYI pair perfectly with BTCI, a behind-the-scenes deep dive from NEOS co-founder Troy Cates, practical strategies for using all three funds in your portfolio, and why investors are flocking to NEOS for smarter, sustainable income solutions. Let's break it all down. Part 1. BTCI, a new breed of Bitcoin. ETF monthly income, plus Bitcoin =, BTCI. Imagine earning a monthly dividend yield of 28% plus while gaining exposure to Bitcoin. That's exactly what BTCI offers. Launched by NEOS Investments, BTCI isn't your typical Bitcoin ETF. While most spot Bitcoin ETFs simply track Bitcoin and rise and fall with its price, BTCI actively generates income by selling covered calls on Bitcoin index options, a powerful strategy that takes advantage of Bitcoin's naturally high volatility. According to Troy Cates, co-founder of NEOS, BTCI was designed as a solutions-oriented product. The idea wasn't to just give investors Bitcoin exposure, it was to solve a growing investor dilemma: how to hold Bitcoin and generate consistent high monthly income. And they're solving it in two major ways. Long Bitcoin exposure via a combination of a 25% position in HODL, a spot Bitcoin ETP, 75% synthetic Bitcoin exposure using index options like CBTX and MBTX high-yield income generation by selling out-of-the-money call options on the Bitcoin index. This allows BTCI to participate in Bitcoin's upside, partially not fully, generate premium from high implied volatility, distribute monthly income in the 25–30% yield range based on recent payouts. And here's the kicker, it's been working. As of June 2025, BTCI has outperformed spot Bitcoin year-to-date, delivering a total return of 17% versus Bitcoin's 15%, thanks to the extra income boost from the call option premiums. In volatile, flat, or even slightly down markets, BTCI can often outperform straight Bitcoin ETFs, a major benefit for conservative investors who still want crypto exposure. One concern with high-yield ETFs is NAV erosion, where the share price slowly declines because the fund is paying out more than it earns. But here's where BTCI stands apart. NEOS is carefully not over-distributing. They cover only 50% of the portfolio with call options, and those calls are often written 13–14% out of the money. This gives BTCI enough upside exposure to Bitcoin while still generating strong income. So far, the fund has had no NAV erosion, even with a 28% plus yield. In fact, BTCI has closely tracked Bitcoin's price appreciation, while adding a powerful income layer on top. And with Bitcoin's volatility likely to remain high for years, unlike the more muted volatility in the S&P 500 or NASDAQ, BTCI's income engine has plenty of fuel to keep running. According to Troy Cates, BTCI is for multiple types of investors. Late adopters of Bitcoin who want exposure without timing. The market, income-focused investors who want to generate yield on a volatile asset. Risk-tolerant income seekers who want more yield than typical equity. ETFs offer, and it pairs beautifully with two of NEOS's best-known products, QQQI and SPYI. Let's talk about why combining all three could be the ultimate move. So BTCI gives you monthly income and Bitcoin exposure. But for most investors, Bitcoin shouldn't make up 100% of your income portfolio. That's where QQQI and SPYI come in. These two ETFs are NEOS's flagship income products, and when you combine them with BTCI, you're creating a well-rounded, high-yield monthly income portfolio with exposure across three unique asset types. BTCI is your high-octane crypto play. It gives you exposure to Bitcoin while generating an incredibly high monthly yield. recently in the ballpark of 28% to 30% annualized. It does this by holding Bitcoin indirectly and layering on a covered call strategy using Bitcoin index options. It's the riskiest of the three, but it's also the one with the most income potential and the highest upside volatility. Next up is QQQI, which focuses on the NASDAQ 100. It provides exposure to high-growth tech names. Think Apple, Microsoft, Nvidia, Amazon. But instead of just holding the index, QQQI writes covered calls on the QQQ ETF to generate income. The result is a monthly dividend stream that's generally around 12% annualized. It gives you growth exposure, some volatility, and solid income all at once. Then there's SPYI, which mirrors the S&P 500. This is the most stable of the three, giving you broad market exposure to large-cap US companies. Just like QQQI, SPYI uses a covered call overlay on SPY index options. The income yield is also in the 11% to 12% range, depending on market conditions, and it serves as the foundation of the portfolio, less volatile but still productive from an income standpoint. So when you look at the trio together, BTCI, QQQI, and SPYI, you're getting crypto, tech growth, and broad market exposure, all packaged with actively managed income strategies that deliver consistent monthly cash flow. Combined, this 3 ETF portfolio gives you diversification across crypto and equities, high monthly income streams, exposure to growth, broad market stability, and volatility-powered income. If you're building an income-focused portfolio with risk balance, a sample allocation might look like this: 50% SPYI foundation and stability, 30% QQQI tech and growth, 20% BTCI crypto and high-octane income. Adjust based on your risk appetite. Conservative investors may want less BTCI, aggressive investors might go higher. Both QQQI and SPYI use index options on QQQ and SPY respectively, rather than individual stock options. That means less single stock risk, more reliable option premium, Section 1256 tax treatment in many cases with 60% long-term, 40% short-term capital gains. They've built up a reputation as some of the most tax-efficient and consistent high-income ETFs on the market, especially for buy-and-hold investors. So how are investors actually using BTCI, QQQI, and SPYI in real life? According to NEOS and Troy Cates, reinvesting BTCI income into QQQI or SPYI. Some investors are taking BTCI's sky-high yield and buying into more conservative funds like SPYI or QQQI. This smooths out overall volatility and compounds the total return. Buying BTCI dips with income. Others wait for a dip in Bitcoin, then use the income from BTCI, SPYI, or QQQI to buy BTCI at better valuations, funding other positions entirely. Many investors use BTCI as a cash flow machine to fund non-NEOS ETFs, real estate, or retirement expenses. Drip it all. The classic approach: automatic reinvestment of dividends into the same fund for maximum compounding. No one-size-fits-all here, but BTCI's high yield creates flexibility that other crypto ETFs simply don't offer. BTCI carries an expense ratio of 0.98%, slightly higher than SPYI and QQQI at 0.68%. Due to the complexity of holding a controlled foreign corporation for HODL, managing synthetic longs and short calls on the Bitcoin index, trading novel Bitcoin index options. Still, the income it generates more than makes up for it if you're looking for yield. Tax treatment is more nuanced. While NEOS typically uses index options that qualify as 1256 contracts with favorable tax rates, the Bitcoin index options currently do not qualify as 1256, so BTCI's income is currently ordinary income, not capital gains. That may change, and NEOS is closely monitoring it. NEOS has already rolled out 12 ETFs, including recent launches like IEOUI, Gold High Income ETF, BNDI, Aggregate Bond High Income CSHI, Ultra Short Duration Fixed Income with Income Overlay, and they're not stopping. An international high income ETF is expected in fall 2025, and they're exploring broader crypto income products, potentially including Ethereum or multi-asset crypto strategies. NEOS is taking a quality over quantity approach, launching products only when they're confident in long-term sustainability. If you're an income investor looking for monthly cash flow, diversified growth exposure, a dash of crypto with controlled risk tax-aware structures and professional management, then pairing BTCI, QQQI, and SPYI may be the smartest portfolio you've never heard of. BTCI provides high-octane income with Bitcoin upside. QQQI and SPYI provide equity market exposure with consistent monthly income. Together, they form a robust, flexible, and high-yield portfolio engineered for the next generation of income-focused investors. Do your own due diligence, understand the risks, especially with BTCI. But in a market where yield is hard to find, NEOS might have built the most modern dividend ETF portfolio on the planet. If you found this breakdown helpful, don't forget to like, subscribe, and check out our full interview with NEOS co-founder Troy Cates, where we talk about the strategy, sustainability, and future of BTCI and beyond. Stay smart, stay invested, and take it easy.